Hi guys, today I'm here to teach you asset equal capital plus liability. Before we move on to the content, I just want to remind you, please subscribe our channel and also please do not forget to hit the bell button because it will give you notification about the new videos which we are going to upload in future. So let's move on to the topic. 2018 past paper which I'm going to do now. Before we move on to this topic, I want to remind you something. The examiner is testing this area most probably on 2000, whichever the papers. In question number 5, Roman number 3, it can be 2017, it can be 2016, or it can be 2018. Let's move on to the question now. Following are some transaction occurred in Samantha's business which sells electrical equipment for the month ended 31st plus 2018, obtaining a bank loan of rupees 100,000, purchasing electric equipment of rupees 50,000 on credit, paying rupees 8,000 to creditors in cash, selling a stock of electrical equipment for 40,000 which cost rupees 25,000, withdrawing of 5,000 in cash by Samantha for his personal use. Before we move on to the question, you need to remember a few things. What is an asset? What is a capital? What is a liability? Asset is something which you get some benefits in future because of your past transaction. Capital is an investment which you have done into the business. And liability, it can be something which you have taken to the business like a loan or something. But if it is a short-term note, we say it as current liability. A long-term note, we say it as non-current liability. For your syllabus, most probably a non-current liability will become bank loan. So for current asset and non-current asset, there are a few differences. Non-current asset is almost like land and building, office equipment, furniture and fittings, motor vehicles. This will be considered under non-current asset. But when it comes to current asset, stock, which is closing stock, inventory, you can say another term for stock, and also cash, bank, and we say another term, we say the trade receivable plus prepaid expense. These are the current assets. So you need to know this non-current assets different, current assets different, equity is different, and also liability is different before we move on to the sum. So I have given you a base knowledge about what you're going to do. And remember, when you're doing this sum, you need to know that when asset increases, it is a plus, asset decreases, it's a minus. In other terms, asset increases, it's a debit, asset decreases, it's a credit. The same way, when it comes to capital and liability increases, it's a credit, and capital and liability decreases, it's a debit. So let's start with the first one. They have done the first one for you. Obtaining a bank loan of rupees 100,000. So they have, yeah. So I think they have done it for you. So for 100,000, they have recorded here. This is an amount which the bank loan has given us. I mean, the bank has given us. So this 100,000 is an addition in cash. So we'll add this 100,000 to the cash. Then the second thing is because you are taken a liability, liability will bring new money. So your cash goes up. So it will increase in your cash account. Now let's move on to second one. Purchasing electric equipment of 50,000 on credit. Before we move on to electric equipment, now there's something called equipment here. And there's something called electric equipment here. Now many people get confused that this equipment is they are representing is the same equipment which they're saying here. So it's you need to understand this equipment and this equipment which you're saying is different because this Samantha's business and they are selling equipment. So their equipment is inventory, stocks. Okay. So whatever you're going to buy or sell is stocks, not the non-current asset. So furniture and equipment is different, equipment is different. So now they are selling equipment or purchasing equipment. Now here purchasing equipment of 50,000 on credit. When you purchase on credit, your creditors will go up. So I will increase here plus 50,000, and I also will increase my stock because 50,000 stocks are coming inside the business. So I'll put here 50,000. That's the second adjustment. So moving on to the third one, paying 8,000 to creditors in cash. When you pay, your money is going down, the cash is going out of your hand. So minus value, the cash will decrease. So I can represent here 8,000 is going out of the business. And also, for whom you are paying the money, you are paying for creditors. So creditors value is going down. You don't want to pay the same 8,000 now because you have already paid it. So we have decreased that also. Then we are selling a stock of electrical equipment for 40,000, which costs 25,000. Now, electrical equipment, which is 25,000, you are selling for 40,000. First of all, we'll record that. So electrical equipment 25,000 is going out of the business. So I have recorded it, and you are getting 40,000. So this getting 40,000, they are not given a bank column. So they are given only a cash column. So it's better we record in the cash column. So we have record 40,000. Then we have when it comes to equity, you need to remember the difference between this 25,000 and 40,000 is 15,000. That 15,000 is the profit. So I will record here 15,000 as profit. Now you need to understand one thing when you're doing sum. Your asset should be equal to your capital plus liability. Capital is also known as equity. So this, if it is equal, only your sum is correct. Now if you see this whole part is assets and this side is equity and liability. Now this 25 plus, 40 minus 25 will give you 15 plus 15. And also here you will get plus 15. So both together you are getting 15,000 only. Then we move on to the last adjustment of the sum, withdrawing of rupees 5,000 in cash by Samantha for his personal use. So when the owner takes the money for his personal use, the cash is going down because he's taking cash, not stocks. If they say stocks, we need to do stocks, but he's taking cash. And also the investment what he has invested with his equity, it will go down. Remember when you're doing this sum, again, I want to give you a small tip. You need to know that whatever the income which you are receiving and whatever the expense you are deducting, you should always do it under equity, because this is not a formula where they are given asset plus expense equal capital plus liability plus income. They are given only asset equal capital plus liability, which is equity plus liability. So you need to adjust income and expenses under the equity column itself. So let's move on to fifth adjustment. It says that you are decreasing 5,000, you are taking 5,000 out of the business. So you will represent under cash and also you will represent under equity. So now we can we are done with the sum. I hope you understood. What are the values of following items of Samantha's business as at 31st 2018? Your non-current asset, your non-current assets, your current liabilities, and non-current liabilities. Now we need to find out these values before we move on to understanding what is non-current liability. So let's get the total of this. Here 160,000. Yeah, I can say 70 20 is 120. 120 minus 25 is 95,000. Here I will record cash. Yeah. So cash you are getting here 152,000. I will record here 152,000. Then I'm going to record, yeah, I'm going to record here equity 245,000. I have bank loan 100,000 and I have creditors 62,000. So I have done with this. Now I need to find my current assets. So you need to know 95 plus 152 is giving you current asset, because stocks and cash, as I already said, is a part of current asset. Furniture and equipment is a non-current asset. So you can directly write here 160,000 is your non-current asset. Current asset is 95 plus 152. You will get 247,000, and current liabilities is 62,000, because creditors are current liability. They are given accrued expense is also current liability, but they are not given accrued expense. You need to consider them creditors as current liabilities. 62,000 and non-current liabilities is 100,000. So that's very straightforward. They are given. I hope you understood 2018. Let's move on to 2017. Let's move on to the sum now. It is 2017 question. So now 2017 question, let's read it together. Following shows the balances of assets, liabilities, and equity of a business as at 1st 2017, and how the transactions that took place during the first week of January were recorded using the accounting equation. And given the assets 200,000 as balance, equity 150,000, liabilities 50,000. And all the asset has increased by 25,000 cash and 25,000 by bank loan. And here on second adjustment, debtors has increased by 15,000, stock has gone by 10,000 down, and also 5,000 profit has increased when it comes to equity. And we have some third adjustment, 7,000 cash is going out and 7,000 equity is going down. And 6,000 cash is going out and 6,000 creditors are going out. So let's make it a bit smaller to see. Okay, zoomed out. Then we have write each of the following transaction with values. Now writing is not that hard. It's just to interpret what they have requested. Now first adjustment, you are seeing that 25,000 cash is coming inside the business under asset column. So cash is coming, and also you have taken a bank loan worth of 25,000. So because of the bank loan, you have taken cash to the business. So you can write here, receive a bank loan rupees 25,000. Yeah, right. Because you don't say it in cash, or you can say received a bank loan in cash, rupees 25,000. Both are same. Then we can move on to the first adjustment. We are done with the first adjustment. Let's move on to the second adjustment. Second adjustment says that you have sold a stock worth of 10,000, because you can see that your stock 10,000 worth of stock has gone out of the business, and you are getting debtors. So you have sold them the goods on credit, and you are getting a 5,000 profit because you have made a sale. So let's move on to the second adjustment. I'm going to write here. Sold goods. Sorry, zoom a bit so you can see, look on what I'm typing. Sold goods worth of 10,000 rupees. 10,000, always try to represent rupees 10,000 for 15,000 on credit. That's how you made the profit of 5,000. So you don't want to say how much you have made. But if you just say that worth of 10,000 goods you have sold on credit, credit is representing the debtors, and also the difference 10,000, 15,000 is representing the profit which you have already earned. And the third adjustment, it says that 7,000 worth of cash is going out of the business and you are paying rent. So that's the reason. So you have paid rent from cash. So you can write third adjustment, paid rent, yeah, paid rent worth rupees 7,000 in cash. Right here, rupees 7,000. So we're done with the third adjustment. So fourth adjustment, again the cash is going out of the asset and you are seeing that your creditors are decreasing. So you have paid a loan which you have taken. So you can write settled rupees 6,000 of creditors from cash or by cash. So we are done with the four adjustments. If you are interpreting, you can interpret it in the way you understand, but remember to use the values and remember to use the assumption. What is happening? So it's going money out means you are paying, coming in means you are receiving. So that's what you need to remember when it comes to assets transactions. Stating separately increasing or decrease of total assets and total equity during the week. Now you need to know the difference, how much you have increased in equity, how much you have increased in assets. So I'll do the second one here. Second part of the question B. How much assets has increased, how much equity has increased. So I'll put a equal column. So I can see here asset has increased. They are not asking the balances, so they're asking the increase. So 25,000, 15,000 is the total increment, 40,000, and total decrease 10,000 plus 7,000, 17,000 plus 6,000, 23,000. So I'll write here 40,000 has increased. And what has decreased? 23,000. So I can present it in brackets. It will give a minus value. So once you deduct, you will get 17,000. That's what you need to represent here. So yeah, that is assets change. Equity, I can see how much it has increased and decreased. You are seeing with me 150,000 is the balance. So 5,000 is the profit you have earned. You have paid 7,000. So your money which you have received is lower than the money you have paid. So how much you have paid? 7,000. So I can, I'm done with this. So I will get minus 2,000. So representing this will give you the whole total 4 marks. So I hope you understood the basics. So either they can ask in interpretation or either they will ask you to write by giving the interpretation. Most of the time they will give you to write by giving the interpretation to do the sum, or they will even interpret it. So whichever you need to practice it. Without practice you can't make it yourself to score on your paper. So let's move on to 2016 now. So the same mistake I did here, minus 2,000. I didn't. So then we'll move on to 2016. I hope you understood 2017 and 2018. So it says Tarinder has started a business to sell school equipment on 1st 2016. Few transactions occurred in that day are given below. So remember the main production and selling is school equipment. So this is what they need to purchase. Always when you are reading a question, read what they are doing the business. So you should not get confused. Employing cash by business to buy Tarindu is rupees 5,000. I mean, employing cash to the business is, to Tarindu is 50,000. They have given here. Purchase of furniture, they are already added because when you invest 50,000 into the business, your capital will go up and your cash will go up. So they have recorded here. Purchase of furniture rupees 20,000 in cash. So when you purchase furniture, your cash is going up. Furniture is coming inside the business. So you can record here because they are saying state how each transaction influences the accounting equation. Follow a format similar to the one given below to give the answers first transaction has done for you. So I can write here 20,000 worth of 20,000, yeah, worth of furniture is coming inside the business. What is going outside the business is cash. Your own cash is going out of outside the business. 20,000. So we are done with that adjustment. Then we move on to the third adjustment. It says that paying monthly rent to the building rupees 5,000. So when you pay monthly rent, your cash is going down again, and also your equity will go down because you don't have anything to like expense formula to adjust it. You will always have equity. So I have already informed income or expense always adjust through owner's equities side. So here you are paying rent. How much is the rent you are paying? You are paying 5,000 rent of the building. So I can write here 5,000 as rent, and I can say here cash, and I can say here 5,000 it's decreasing because of rent. So I have informed it correctly. Then we are done with that. We are moving on to the fourth adjustment. It says that obtaining a bank loan of 25,000. If you receive a bank loan, your cash will go up, and also your bank loan, which is the liability, also will go up by 25,000. So I can write 25,000 here. Liability is going up 25,000, and also I can say here cash is going up by 25,000. So you need to know, like some areas I haven't kept spaces, some areas I have kept spaces, but it's not it's not that important. You need to remember to keep a comma after every 3 digits difference. You should keep a comma on paper. So remember that when you do. Okay, so then we move on. Purchase of school equipment 10,000 on credit. So you are purchasing goods on credit. Then of course school equipment is increasing, stock is increasing to the business. 10,000 worth of stock is coming to the business. So I will write here 10,000, and also I will write here owner's equity. When money is coming to the business, which is 10,000, owner's equity will not get affected. What is going to get affected is liability because we are going to purchase on credit. The school equipment, if you see here, they are purchasing on credit. Now let's take it as a liability and plus it up because it's a thing which you are taking on credit. So you need to plus 10,000 is credit. So that's all. They're asking what is current asset, or liabilities in equity. So on 2018, they have given different columns like furniture, stock, cash. So we was able to find it very easily, but here they haven't given that. So you need to be very much concerned when you are doing this sum. So now here you might see what is the current asset, non-current asset, current asset, or liabilities, and equity. So we need to find out. So let's find out together. So here we have found out 25,000. We didn't write the narration for this. 25,000 here you can write bank loan cash, and here you can write bank loan because you took liabilities bank loan, and here also you can say that. Here the last adjustment. What are they saying? They are saying that you purchased school equipment for 10,000. So you can write here purchases and say school equipment, and you are purchasing here on credit. So you can say here the term because they are purchasing on credit, creditors. So creditors will give you the word goods. Now it's easy for us to find out what is the non-current asset, current asset, and current liability. Now we need to just apply our knowledge to get these things correctly. Here they are given cash 50,000, furniture 20,000, cash is going again 20,000, minus 5,000 is 25,000, and plus 25,000. So plus and 25 minus 25, there's no difference, such difference. So let's take first non-current assets. They are given furniture, only furniture they have purchased. So I'll consider furniture as non-current assets, and I will write here furniture 25,000. Furniture 25,000. So I'm done with the first one. So let's move on to current assets. What are the current assets I have? I have cash and I have school equipment, which is 10,000. So cash 50,000 is here, and there are another cash which is going out of the business, which is 20,000 minus 5,000, which is going out of the business. So altogether 25,000 is going out of the business, and we will be able to. So now they are given the 50,000 cash and 25,000. You need to remove it off. Once you remove, you have this 25,000. This 25,000 will be set off. So altogether, you need to consider cash as 50,000. So right here, cash 50,000, and you have school equipment. How much is school equipment? School equipment is 10,000, which you have as current asset. So you write here school equipment as 10,000, and now altogether you have current assets of 60,000. This is your total. So you can write 60,000 rupees to show your current assets. Let's move on to total liabilities. We have total liabilities. They have asked not current liability. So 25 plus 10 is 35,000. So you can write here 35,000 as total liability. And also when it comes to equity, Then we need to find the equity. It's very easy to find the equity because they are given 50,000 as the opening equity. Plus, you need to deduct 5,000 from the rent. So you have equity worth of 45,000. So we have already found all the adjustments. So recording will give you marks. If you really know how to calculate, how to deduct, how to add it back, then of course you will score good marks on paper. Remembering the asset, capital, and liabilities is very important when you are doing the sum. And also that's you need to practice a lot as possible to make your marks improve. And I'm just giving you one final reminder. Please do not forget to subscribe our channel to learn more videos with us. See you another day with another video. Bye guys. Have a nice day.